Hey traders, checking in on the stock market today. We're going to go over some trade review and our usual technical analysis, and I'm going to talk about the differences in position sizes, focusing on what you're good at versus what you are not so good at. So, S&P 500, this was the chart that we were looking at yesterday for the potential that it was a bull flag, and we started with a nice clean bull break of this pre-market, and then we back tested and held it for an hourly higher low, and then had a really strong start to the morning with bulls keeping that complete control. So that was definitely a good start for the bulls because it looked like daily bull flag or 12-hour bull flag was looking to confirm, and we were heading up towards resistance there. So you can see it's a fast, strong start on the morning, and we didn't establish a ton of supports on the way up. There's our big move, little 2-minute higher low in there. That's not even a 5-minute higher low for me. It's a support level to make note of, but you know, if I would not look at that and say we have a clear 5-minute uptrend on the S&P 500. So we failed to confirm it. We failed to confirm a 15-minute uptrend. We essentially shot up hard and fast and then gave the whole move back. And it was a convincing rejection from resistance. And so this was a scenario where I was bullish on the morning, seeing the start and seeing the potential for the bull flag shaping up and just watching for it, saying, okay, bulls, prove something. Or actually, I was in a mindset after the first 15 minutes where it was, all right, bears now need to prove to me that this is not a bull flag. I've seen enough where the burden is on bears. And at this point, they've done a good job of that by the end of the day. But started the morning bullish. So with that, I was exiting my overnight protection. Whenever I'm going into the overnight session flat, it means I have a bear position because I've got my SPY long-term no-touch position. And I'm essentially looking to offset that. And I've been going flat the last couple of nights just because I haven't really been sure on short-term direction. And so I exited that short on the morning and started to grab some swing trade longs because, as I had mentioned, I was looking for a daily higher low to add to my IRA on the S&P 500, but I chose to go with INTC and a little bit of MARA just because I haven't had any crypto exposure in a while. So we'll look at those charts individually in just a moment, but I want to talk a bit about position size because I, as you know, I'm a day trader. I'm way more comfortable day trading than I am swing trading. And so my swing trading position sizes are much smaller than day trading for a number of reasons. Number one, I'm not as good at it. Number two, the stop losses are generally further away, which means there's more risk. Number three, overnight sessions have added risk with them, just in the sense that we could get a gap down or, bearish news overnight. So smaller positions help me protect against that little bit of added risk that a swing position has that a day trade doesn't have, where your stop loss is going to trigger if it gets hit most of the time. So I ended up grabbing a couple positions, but I guess we'll go through my whole day. So I started the day scalp trading on the 1-minute time frame, and I can only scalp trade like this if I am not live streaming, because if I attempt to talk at the same time, I'm just fumbling all over myself because I'm essentially placing 3-4 orders in the span of just a couple of minutes. So I was looking at Tesla first thing on the earnings reaction, and I saw the bulls initially hold 204, which is the lowest price that we've seen on the year for Tesla so far, the 204s. So I see it hold, and then I see an inside bar. And on the 1-minute time frame, the inside bar breaks bull. So I say, okay, that's my entry. So I'm long at 207.73. I don't love that fill because I mark it by that resistance break, and it did fill right after that inside bar broke bull, but my stop being down at 205.55, I don't love that risk to reward. I'm risking a bit over $2, which means my reward would need to be, we would need to go up to 211, 212, where there's a whole bunch of pre-market resistance if it's going to be a worthwhile trade in terms of risk to reward. So I end up exiting half right near the top, 209.34, and that's just me saying, okay, I want a little bit of wiggle room. I'm not comfortable with $2 of risk on the entire position. If I exit half in the 209s here, my break even on that trade goes from 207.73, and that's a gain of, let's just call it $1.60. So now my break even is 206.13. So then, okay, no red flags. Then a 1-minute inside bar breaks bear. That's a red flag candle to me. We gave back the entire move. Normally, I just stick my stop under the low of the day, and I would risk, a dollar loss on a half position, which would be a quarter day loser if that were to trigger. But I recognized, okay, that's the wrong direction, And I want to grab a short if we break the low of the day from here, because that's going to likely break the low of the year, and we might see some follow through for the bears if that takes place. So I exit rather than putting my stop. This was essentially just me saying, all right, I don't want to be long anymore. I'm exiting. It ended up being a loss of something like, 4% of a day loser, pretty much break even. But it was then me saying, all right, I'm going to short if the low of the day breaks. So rather than just letting my long stop out, I want to short on that trigger. So I short it at 205.38 right after the low of the day breaks. And from there, all right, I just learned my lesson in terms of selling half fairly quickly was a good idea because that saved me from a solid red trade to start the day. So I sell half of my short very quickly, 204.53. That now puts my break even. Let's see, that's a gain of maybe 90 cents or so. So that puts my break even now in the low 206s, 206.30 or something. So all right, I've got a little wiggle room now. 206.30, break even, half position. We then get this little 1 minute bounce and we top out at 205.87. And then we get continuation. Okay, great. This trade's working out for me and I'm not gonna lose at this point. So I set my stop loss at 206.01. As soon as I see that 1 minute bounce and the lower high, I set my stop over 206 knowing, okay, if we break the 1 minute lower high, I will stop out with a tiny win and I'll be break even on the morning. So then we keep pulling back and I recognize, all right, we're getting towards a day maker level and I'm anticipating, at this point in time, it's 941. What is the S&P 500 doing at 941? It's going up at that point. We're just starting to. We bottomed and had this big green candle. So I wasn't confident saying, that's the low of the day on the S&P 500, but I could see Tesla was struggling at 203. And I just saw a couple minutes where it couldn't get over 203. So I said, all right, well, I want to lock this in to have a nice little win to start the day. And so I exited when that 203 little wall of resistance, very small wall, but as soon as that broke, and I stopped out for the second half of the position at 203.21. So in the end, half a position gets a gain of about $3, which is a 3/4 of a day maker for me and how I start my day. And so, okay, that was fast action, probably done with Tesla for now. And at this point in time, the S&P 500 starts going bull. So I say, all right, I've got a 3/4 of a day maker locked in and SPY has started to bounce notably. And we see this nice move up and then this quick little higher low and higher high. And then that increasing bull volume. And so then we start to break the high of pre-market. Okay, futures hourly uptrend remaining intact. So I exit my short exposure and I go long on INTC, which I've mentioned a couple times in these videos just because it's a nice dividend stock and it's crushed on the monthly, weekly time frame. And so it was looking good to shape up a little daily trend change here. It was an inside bar bull break. We started the morning extremely strong, just straight up out of the gate. I made my entry around 26.70 on some brief consolidation. We end up going 1% higher, and then that marks the high of the day. But position sizing. This position size for a swing on INTC was based on this low. I'm looking to hold this in my IRA. I want to hold it for months. Do I think that I'm going to nail the bottom here? No, I don't have high confidence. Otherwise, it would be a large position. I have a scenario where, okay, I haven't entered any long swing positions in as long as I can remember, which means probably 4 to 6+ weeks at this point. So I've done a good job laying off, looking bullish, but I am going to make a bull attempt, as I mentioned, on this current daily trend change attempt. And so I grabbed some INTC for the possibility that we were going to confirm these bull flags and bulls were going to keep this daily bounce going from the CPI little climax from last week. So grabbed INTC at 26.70. And so, again, position sizing, this position is 15% the size of what I just traded on Tesla when I was in a full position. So what does that mean? That means that my 3/4 of a day maker on Tesla in 5 minutes as a day trade scalp, if INTC is going to give me that loss back, it would need to be, if my entry is 26.70, it would be pretty much 24.95 is now I'm break even on the day. So 24.95 means that we can drop a lot. 7%. We can drop like 7% to offset the 1% bull flip that I just made. And so that's how I trade, because I am way better as a day trader than I am as a swing trader. And so I also know that my position is going to be a lot smaller because my stop is going to be under 224.59, which again is a lot of risk from an entry in the 26s. I'm risking 10%, something around 10% before I stop out. So position size is way smaller. So I am, at this point in time, do I think this is a trade that's going to play out? No. I mean, the fact that we pulled back this significantly from that consolidation, we've got space now for an hourly lower high. So from when I entered to where we stand at the close, probability that this trade is going to work out is a lot lower. But I'm going to let it play out. And the reason I'm going to let it play out is when I made the entry, I completely allocated the amount of risk that I'm willing to take. And in the end, if I stop out of this trade, I pretty much lose a day maker, which is something I'm very confident that I will make tomorrow with a day trade. So this is an example where I want to exit this position, but that would be succumbing to my emotional reaction to the price action versus letting the trade game plan play out. So I am in an INTC position and it's not looking great. It's not looking good, but I'm going to let it play out. And if I stop out, then that's the case, because again, as soon as I pressed buy, I fully accepted the maximum loss that I would take on this trade, barring some unknown event. If we were hovering around the low and heading into earnings, I would exit, because that's a scenario where if we get a 5-7% bearish reaction to earnings, now my loss is a lot larger than I allocated. So I would need to see these bulls over 27 if I'm going to be willing to sit through earnings. But we'll see. We'll keep track of it from here and see how it plays out. But shout out to Joey in the chat room here, because he helped sway my overly bullish mindset. So at that point, I only have bull exposure, and I grabbed an MARA position as well. And that position got a lot of follow through from my entry. I entered in the 1120s, pretty much this new high of the day. I made my entry here, and that's me saying, I don't really want to grab a crypto position right now, but I'll grab some MARA just for some exposure. And this is the kind of scenario where, if I had left the computer at that point, right after I grabbed it, and my stop is under 1060, but it's the kind of scenario where, 4% of follow through in less than an hour, normally I'd be taking some position off. But again, it's a very small position size. So if that's a day trade, I'm scaling out a lot, but because it's a much smaller swing trade, 4% in either direction isn't really a huge deal in terms of what my day maker, day loser size of a position is. But Joey came in with this post to snap me out of it and say, pretty much he put my bear glasses on for me. And he said, we can't forget at 1018, he's saying we can't forget that the 4-hour lower high on ES on our futures chart is the most likely scenario from here. So yes, bulls make a break on that hourly chart to start the morning, but zoom out to the 4-hour and we've got this little resistance zone, and we're heading towards those resistances. And the NASDAQ was even closer to those resistances and obviously rejected hard as well. So Joey gives the heads up, and then right after that, I affirm like, oh yeah, there's key resistance approaching, and we're extended on the short-term time frames. So right after he posted that at 1018, look when we topped. High of the day was 1020. So he posted that at 1018, and then I reiterate it saying, yeah, Joey's right. Watch, nope. Aggressive bears, 1021. Aggressive bears are hoping we run straight into futures 4-hour resistances overextended for a top fish, meaning watching the short-term time frames get overextended. So we had a 5-minute RSI at the high of the day. That was up at, where are we here? So 5-minute RSI hit 70, 15-minute RSI hit just about 70, and that's where we topped out. Some short-term RSI levels capping out there. And so rather than selling to take some profit into resistance, that's where I grab back some bear exposure, because at that point in time, I've got no bear exposure. And if you're running into a resistance level and you got 5 and 15-minute RSI overbought, it's a good time to take some profit as a bull or to hedge your bullish positions because of that key resistance looming overhead. And you would have to see a really strong all-day control if you're going to follow through and break that resistance after that strong start in the morning. So from there, what's next? So that was that. And I'm still now back to having a bit of bear exposure into the overnight session to offset some of these long swings. And again, same thing, MARA. I'm probably going to stop out of this position, but I am going to let it play out. I was looking for MARA to give us a daily, that's not it, MARA to give us a daily high or low in this equilibrium. And we were looking good for that daily high or low, but obviously the big upper wick no longer looking nearly as good. So that's where I stand. I have a couple smaller swing positions in my IRA with stop losses clearly established. I have a bit of short exposure to help offset some of the long exposure that I have, and going to continue day trading and definitely open to bear day trades. And at the end of the day, we had one of those where, it gets to a certain point in the day where not comfortable shorting some extended drops down, but that just means wait for the next bounce. And so we knew that the next bounce, I've been liking 15-minute lower high bearish entries a lot for day trades the last few weeks, probably the last few months. And so I see this waterfall drop, complete bear control. I don't want to short down here. I don't like the risk to reward. But as soon as you get a bounce going, I like the risk to reward much better. And so it's watch for those 15-minute lower highs, keeping an eye on EMA 12 resistance. So 15-minute EMA 12, we hit it. Now I know to zoom in and be scouting a bearish entry for that 15-minute lower high. And we zoom into the 1-minute time frame, and it's a rising wedge. So a rising wedge into 15-minute EMA 12 resistance with a 15-minute lower high being the most likely scenario. So there's a number of entries here. You see the high, aggressive bear enters on this double top. The next most aggressive bear enters after this 1-minute support break after the double top. The next most aggressive bear enters on a 1-minute lower high, top fishing this high. The next most aggressive bear enters on this support break and the rising wedge confirming the downside action. So there's a number of, and again, this is the 1-minute time frame. So we're talking in a 7-8 minute window. There's a few different triggers that can have a bear make that attempt. What if you're wrong? What if you try for that 15-minute lower high and we just keep going? Then you stop out with an acceptable loss and then go back to patiently watching for a potential 15-minute lower high to form at a different level. So that was a nice little, that's how if a move is running away from me and, man, I want more bear exposure, well, I'm just waiting for the next 15-minute lower high and then I'm scouting it. So as we head into tomorrow, bears have short-term control and they've got space for an hourly lower high to be the most likely result of the next bounce. And the NASDAQ is the same. The NASDAQ is holding up a little bit better, but not by much. And again, same thing, we got space for an hourly lower high to be the result of the next bounce. So if we keep seeing weakness, I'll stop out of my first bull attempt in a long time and back to be focusing on bear day trades. And if bulls are able to pull off daily higher lows and shape up these inverse head and shoulders, hopefully I'm not stopped out of those long attempts at that point, and we see a daily uptrend. So in the end, we're essentially had a bit of a fake out where bulls showed strength and broke resistance, the high of yesterday, and then fell right back and broke the low. And that's obviously a red flag for the bulls to give it all back and close near the low of the day. And so we're going to continue watching what daily consolidation looks like from here. But nice win for the bears. That's a lot of talking. 19 minutes. Thanks for sticking with me. We're going to go through the rest here fairly quickly. The dollar had a big morning drop, but then a V-shaped bounce. Watching this 4-hour resistance, but again, I'm on the daily here. And all I care about really is 111.77 and 113.92. And we're right in the middle of that range. The burden's on bears, dollar bulls still confident. Tesla closed weak. Again, it hit a new low of the year today. Now we're just watching 200 psychological. And so if we break 200, I'll call it a convincing bear break of support. We're still playing around these low 200s. Semiconductors started the morning extremely strong. Inside bar bull break, broke to the highest level of this bounce. We broke a double top after the inside bar, but again, gave it all back. And we've got the space now for an hourly lower high. Next bounce, we have to see how tomorrow morning shapes up. But still watching for, the daily EMA 12 resistance is still giving bulls a hard time here. Healthcare closed weak. No sign of a daily high or low yet. Financial sector, no sign of a daily high or low. Financial sector was a lead bear sector. It was leading the way down the majority of the day. IWM broke the high of yesterday. No follow through. So no sign of a daily high or low yet. Biotech sector, still holding on to support after the very notable weakness yesterday. No sign of the daily high or low. Nice big bounce, but gave it all back. No hourly uptrend confirmed. Utilities, daily lower high set, heading back down to test its recent low. There was relative strength in USMJ. This is the first time we've seen this in a while. And it still has to do with the momentum from the news of one of the companies getting a partnership with, exploring with Circle K gas stations. So definitely still paying attention to the sector, and I will be as long as we're heading into the voting season for many reasons that I have said many times at this point. But it is a triple top. So tomorrow's going to be key. 1093, 1095, and now 1097. What do bull breaks lacking follow through mean? Cautious of a rising wedge. Key support is 1050, but if we don't get over 11 convincingly tomorrow, bulls need to be cautious of a rising wedge, which would be a daily lower high. So again, potential hourly rising wedge with a daily lower high being the most likely scenario increases the probabilities of a rising wedge, but we'll know within the first 30 to 45 minutes tomorrow, because if we break 11 and then give it right back and the broader market sees continued weakness, then I'm going to be looking for the daily lower high to be set here. But I personally am going to have some exposure in this sector as long as we are holding 940 and we're heading into that voting season event in terms of having potential further headline exposure and things like that. Oil followed through from the daily high or low. We know anything under 92.34 is a lower high. Bears would love to regain a downtrend from here. And it's all about the weekly. Can the bulls confirm an inverse weekly head and shoulders, or do we head back to fresh lows? And we know that the energy sector is still seeing relative strength. Not really a red day today. We closed lower than we opened, but now we're watching this for the potential of a rising wedge. Are we breaking resistance and lacking follow through? Is this another scenario where this is a relative bull? This is the strongest bull sector that I'm looking at right now. Is the relative bull going to roll over into a laggard bear if the broader market heads back to fresh fear lows? Essentially, for me, if the energy sector is going to stay strong, the S&P 500 has to confirm the first daily uptrend in 2 months. Anything less than that, and we're going to watch it for it to be a laggard bear. Metal's still extremely weak. Gold still down, testing the lows. Silver had a better bounce, but couldn't keep the gains. A little bit of a base of support on silver at the least, but still a long way to go to prove any confidence. And natural gas is still all bears, testing the monthly support of 528. We broke it. And just getting real beat up here on a lot of these time frames. So that's where we stand. Apologies for the rambling, but just a little bit of insight into how I approach my strength as day trading with a lot more capital in play versus my, won't call it a weakness. I mean, I guess it's a weakness. As a trader, swing trading is one of my weak points. So yes, it's a weakness. And using way less capital on that, especially in this market environment when I'm trading counter trend. And, this is an attempt to hit a longer term bounce. Not a very confident attempt, but again, when I haven't made an attempt in so long, it's like, all right, you've been a real good boy. You can give a little bit of a leash to attempt a bounce and risk a day maker or two for that attempt. What are you all doing? You entering longs? Are you staying short? Let me know. Appreciate you watching. I don't have any after that exciting garlic content. I've got nothing else new here, but we've got Twitter Spaces tomorrow, 3 p.m. Eastern, general Q&A. So stop on by and feel free to ask any questions. And then next Tuesday, 9 a.m. to 10:30 a.m. on this YouTube channel, we're going to do a public live stream where I go over the pre-market setup and talk about the open and stuff like that. Pretty much an open house for the usual live streams we do. I hope you're well. Do good things. Have a great weekend. Burden now back on bulls. So burden on bears to prove it's not a bull flag. They did. Now burden on bulls to set daily higher lows. See you soon.